Hello and welcome back to another episode of Gold Tales. Before we get started, a quick disclaimer. The information shared in this video is for educational purposes only and is not financial advice. Please do your own research or consult a financial advisor before making any investment decisions. In our last video, we explored why gold is the ultimate investment and how it can fit into your overall investment strategy. In this video, we covered the three main ways to invest in gold: physical gold, gold ETFs and mutual funds, and gold mining stocks. We started with physical gold, things like coins, bars, and even jewelry. While it's a tangible investment you can hold in your hands, it comes with challenges like storage and liquidity. Next, we talked about gold ETFs and mutual funds. These let you invest in gold without the hassle of storing it. They're easy to trade, but you need to be aware of management fees and the performance of the fund. Finally, we discussed gold mining stocks. Investing in mining companies can give you exposure to gold's price movements, but they can also be more volatile due to factors beyond just gold prices. Each of these options has its pros and cons, but understanding them will help you choose the best one for your investment goals. If you missed it, definitely check it out in the link below. Today we're diving deeper into the world of gold by analyzing market trends and what they mean for you as an investor. Understanding these trends is crucial, especially in today's unpredictable economic climate. Let me share a quick story that illustrates why paying attention to market movements can make or break an investment. A few months ago, I spoke with an investor who was excited about a sudden spike in gold prices. He jumped in without considering the bigger picture, the underlying economic factors at play. Shortly after, the price plummeted due to rising interest rates. His lesson? Investing isn't just about timing the market. It's about understanding the forces driving those prices, areas we explore in today's video. Let's start by discussing the key market influencers that impact gold prices. First up is inflation. When inflation rises, the purchasing power of currency decreases. Historically, gold tends to perform well during periods of high inflation, as investors flock to it to protect their wealth. This makes gold an attractive store of value. And in case you had wondered what its symbol on the periodic table is, it's AU. The symbol AU for gold comes from the Latin word aurum, which means glow of the dawn or gold. The name reflects the ancient association of gold with the sun and its radiant, gleaming appearance. Gold has been valued by humans for thousands of years due to its beauty, rarity, and resistance to tarnish. So gold's symbol AU is directly tied to its historical significance in the language of the Romans. Next, let's talk about interest rates. When rates rise, the opportunity cost of holding gold increases because you miss out on interest from savings or bonds. But when interest rates are low, gold becomes a much more attractive option. Finally, geopolitical events like wars, political instability, and economic crises can drive gold prices up as investors seek safety. For instance, during the Brexit vote in 2016, gold spiked as global uncertainty loomed. Investors flocked to gold as a hedge against the unknown. Now that we've covered the key market influencers, let's touch on a powerful tool many investors use: technical analysis. Technical analysis involves studying historical price movements through charts. By analyzing trends, investors can predict potential future price movements. When we talk about bullish and bearish trends in the market, we're really referring to the general sentiment or outlook investors have about an asset's future price movement. These terms come from the way the animals attack. Bulls charge upwards, symbolizing optimism, while bears swipe downwards, symbolizing pessimism. In the world of investing, these metaphors help convey the market's collective mood. One example of how this works in the gold market: back in 2018, we saw a key double bottom pattern on the gold chart, signaling a price reversal. A double bottom is a pattern on a chart that looks like the letter W. It happens when the price goes down twice, but it doesn't go lower the second time. It's like the price is bouncing off the bottom, then going up again. First dip, the price drops. Bounce up, the price goes back up a little. Second dip, The price drops again, but not lower than the first time. Big bounce. Then, the price starts to rise up for good. So, why is it important? This pattern often means the price could go higher, and it can be a good sign to buy. Investors who recognize this pattern were able to get in before a significant uptrend and make considerable gains to their portfolios. Technical indicators like the Moving Average and Relative Strength Index, or RSI, help investors assess market conditions. The moving average smooths out price data, showing the trend's direction. The RSI helps determine if an asset is overbought or oversold, signaling potential price corrections. Now let's take a look at the current state of the gold market and how these principles apply today. Gold prices have been fluctuating recently due to a combination of rising interest rates and ongoing geopolitical tensions. For example, as the Federal Reserve raised rates in early 2023 to combat inflation, gold prices saw a short-term dip from around $1,900 to $1,700 an ounce. However, analysts predict that if inflation remains stubbornly high or if economic uncertainty continues, gold may regain its strength. This means it's crucial to stay informed about both technical indicators and macroeconomic trends. To summarize, understanding the key market influencers, like inflation, interest rates, and geopolitical events, is crucial for analyzing gold trends. Along with that, mastering the basics of technical analysis can help you spot potential price movements. And of course, staying informed on the current market conditions is key to making smart investment decisions. If you found this video informative, consider liking and sharing, and subscribe to Gold Tales, while tapping the notification bell so you won't miss out on our upcoming episodes. Thanks for watching, as we really appreciate your viewership, and look forward to hearing your thoughts on Gold Tales' next video episode, where we'll discuss risk management strategies for gold investing. Until next time, stay golden.